Scottish Mortgage aims to invest in the world's most exciting growth companies. And we will go for those companies wherever they're located and whether they're in public or privately listed. Our investment process is very straightforward. Everybody should be able to understand it. We look for companies that address very big opportunities, and then we ask why this company has the right to win in that opportunity. And then as we evaluate those investments over time, is the opportunity getting bigger? Is the likelihood of success increasing? And the characteristics that we're looking for are the competitive strengths of the company, the management team, and how that translates into the financial characteristics. Our aim is to achieve capital growth over the long run. And the price that we pay for being long-term patient investors in a concentrated set of companies is that we have a volatile portfolio. So what's, I think, really important for investors is that they are prepared to accept significant volatility in pursuit of long-term capital growth. And that means being patient, having a long time horizon, not being tempted to check the share price every day, but thinking about what happens over 5 years, what happens over 10 years. Well, we are very long-term in our thinking. And I think when you extend time horizons, ESG and investment cease to be separate things. It's really important when considering the long-term investment case for a company, what its impact on the environment, what its impact on society is, if it has appropriate governance. Now, if you're going to own shares for 6 months or less, these factors don't really come into play. But if you're considering the opportunity over 10 years, I think they're a central and intrinsic part of the investment process. We think that having a modest level of gearing or debt to enhance return for shareholders over the long term is a good thing. We don't have an explicit target or limits, but we try to keep the gearing at modest levels, manageable levels. And we also don't have a target for discount control, but instead we have a long-term track record of trying to keep the share price and the net asset value as close together as possible under normal market conditions. And we've committed very substantial amounts of capital to buying back shares over the past 25 years in pursuit of that objective. The way that we think about Scottish Mortgage is that everybody should have some Scottish Mortgage, but nobody should have all their portfolio in Scottish Mortgage. We are trying to do a very specific job for our shareholders. That is the pursuit of long-term growth in capital, accepting that there will be some volatility with that. And so it fits as a part of a broader portfolio by trying to do one very specific job.